Hey, Ryan Shepard, partner with Knight Larry Shepard CPAs here in Fairfield, Connecticut. Today I'm going to talk to you about something pretty exciting. I know taxes are super exciting. So a couple days ago, the IRS gave clearance to the allowance of taking state and local tax deductions from pass-through entities. And that's exciting, particularly if you are a self-employed person or you have your own business. So states in which you have what's called a pass-through entity tax, like Connecticut, for example. So let's say you have a partnership, two partners. The state of Connecticut says you have to pay the income tax on the earnings of that at the entity level, so no longer at the individual level. What does that mean? It means that the partnership is the one writing the checks to the state, and the state gets the money, and you get a deduction for that on your partnership share of earnings that eventually flows down to you on your tax return. So partnership return is done, takes a deduction for the state taxes that you paid. And remember, that's state income taxes. And you pick that up off your K-1, you put it on your 1040, and in effect, you have deducted the state and local income taxes on that income. Now remember, the tax reform law of December 2017 said we're capping state and local tax deductions at $10,000 for individuals. Well, this is sort of a workaround. So if you have a pass-through or a partnership or an S corporation that is paying state and local income taxes, this allows you to deduct it now and exceed that cap of 10. So what has happened is in the last couple of years, there's been some scrutiny on this issue because some folks, particularly in Congress, have said, well, that's kind of a workaround to the state tax deduction cap of 10,000, and that's true. However, just a couple of days ago, the IRS came out with some guidance that says, in effect, they're going to allow it. So now you're going to have, instead of a handful of states doing this, you're going to have this populating amongst many, many states now as a workaround to that particular issue. This creates an opportunity. So if you're in Connecticut and you're already a partnership or you're already an S corporation, Connecticut, for example, we already have this. So you're already taking advantage of that. However, if you are in Connecticut or you're in a state that has this as well, and you are a sole proprietor or a single member LLC or something like that, look how I use my hands like this. If you are one of those people, then you have a planning opportunity here because you are not able to take advantage of that. So if you think about it, you're a Schedule C person or you're a self-employed person, you cannot do that. So you're still capped at the 10,000. But if you're a partnership or an S corporation, you're not capped. So that's a great opportunity, right? So the opportunity is, well, wait a minute. So if I just add a partner, even if it's a 1% partner, would I be able to exceed the cap of $10,000 deduction for state and local income taxes on my federal return? And the answer is yes. So let me just give you a quick example of that. Okay. So if you look at this, in this particular example, you have a solo practitioner, Schedule C, they file on their personal tax return. In that example, you've got net income of $750,000. You've got state tax on that of about $52,000. Net income on the return, $750,000. Your itemized deductions, I've got my cap of $10,000. I've got mortgage interest of 15, and this is just an example. I've got my charity of 5 and total itemized deductions of 30. My total federal tax in that example is $237,000. Let's say I add a partner now. So look at this. So I add a partner over here, and even if it's a 1% partner or 50%, doesn't matter, because now you're considered a pass-through entity, and you get to pay that tax at the pass-through entity level. So now you can see in this particular example, we start with the 750, right? But I get to deduct the state tax that's being paid, the $52,425. That brings my federal taxable income down to $697 in this particular example. And look down here. So now my net income is $697. I still am capped here. And by the way, this state tax here, that includes your real estate taxes too. So you're still getting the 10 because everyone, at least in Connecticut, you're going to be at that level. So I'm still getting the 10, and think about it. Now I'm getting to deduct the 52 as well. So I'm getting to deduct the 10 plus the 52. Now look what that does. It takes my total tax down to 216 versus 237 by just adding a partner. That's a total tax savings of $20,000. So as you can see, that's pretty substantial. So now that we have sort of the green light, if you will, you have a sole practitioner or a larger Schedule C type client, you may just want to add the spouse as a partner on the business, and now all of a sudden you've created a situation in which you have an easy way to save some tax dollars in that regard. But if you do have any questions, feel free to reach out to us. We're here to help, but it's a great opportunity for many folks. All right.